Good morning, traders. Thanks for joining me this morning on episode number 2409. It is 8:04 a.m. Chicago time on Wednesday, the 8th of February, 2023. YouTube's changed a few things around, so you kind of have to figure it out as the broadcast is supposed to be going. So that's not fun. This is why we're late this morning. Um, I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's take a quick look at our convergent trading pre-market summary sheet this morning. Couple things going on. You could see that the European indices are stronger this morning. Oil has popped higher as expected. Oil was pushed through the 77 yesterday. The key target yesterday was 77 on oil, and it's come through there. Next key target 79, 25, 26. The indices, the U.S. indices, are off despite the strong close yesterday across the board. The indices are pulling back this morning. So we have a bit of a mixed market with Europe being risk on. This morning, earnings, CVS, Total Energies, and many others after the close. Disney, that's the big one. And then that pretty much tapers off or wraps up the earnings season for this quarter. The main thing that's driving the market, the macro, is the fallout from Fed Powell's comments yesterday in the Q&A. He seemed relatively hawkish to dovish to hawkish to dovish in what he was saying. He was saying that he was concerned about the really big report, jobs report on Friday, which may lead to more measures to temper inflation. It might take longer to temper inflation, so that's pretty hawkish. But he also says that he's seeing, decent indications of an economy that is growing and is strong. So that's pretty dovish. There's a bunch of speakers, Fed speakers this morning, 9:15, 9:30, at 10 o'clock. And then the Manheim used car index came in yesterday during the trader bite, shows more strength in the used car market for January. Zoom's cutting 1,300 jobs, eBay's cutting 500, Microsoft to integrate AI into the Bing search engine for those of you who use that. The rest of the calendar, wholesale inventories 10, and then ECB's not at 10 as well. We get crude oil reports, the EIA reports today, and then the crop report. The crop report at 12 Eastern. Following that 10-year $35 billion auction at 1, the Bank of Canada minutes for January at 1:30, and Fed's Waller at 1:45. That's what's on deck. Looking at the S&P statistics, 193,000 contracts traded, multi-distribution profile, pretty active price discovery to the downside in the S&P, 26 points of range, with the point of control 41.56, which is important from yesterday. 41.50 was very important from yesterday. It was a key line in the sand. So that's where we are there. Let's take a look at the charts real quick. Here's what we have. The S&P pretty clean, clear, solid, kind of balanced day. We talked about this yesterday. Balance leads to imbalance, so we were opening outside of value in range. Was expecting it to test up towards the 41.25 area, and was expecting it to push down with a target of 40.90. It couldn't quite get that done yesterday. It really struggled to push lower through 4100. So it stopped at the 4100 here, big battle at the 4100, and then we consolidated and just chopped around. There was nothing to do yesterday morning for the first, I don't know, for the first maybe hour and a half. Yeah, I would say hour and a half. There was just nothing to do. And then, we started to creep up later in the session. Then Powell came in. We pushed higher, pulled back all the way through, went neutral, and then pushed back into the close to finish up high. So what we did is we ended the one-time framing down in the S&P, and we've moved back into this 4175, 4192 area. So this is what we've got. Here's the action. Here's the action yesterday. The action is just really, much of it is pretty garbagey right here. There was really nothing to do here. We stayed inside of the prior day's range. So you could see yesterday the prior day's low is right here. This dotted green line. And so it stayed in between the point of control of the prior day, the settlement, and point of control of the prior day, and the low. And then it shot off right here. 24.75 was the SOC for the Fed. The Fed gets a quick pop into the 40s, pulls back to the SOC, and then takes off all the way up into 75. 75 was yesterday was the magnet, was the key price that that we needed to that we would be attracted to. That held beautifully, and then it started its trip down to extend the IB down into 4100, consolidate, and then it started to run up. To me, this action right here, this impulse with an expanded impulse down, to me, this was all selling. So I was looking to be a seller, and we found the selling point at about 41.16, 17 against the IB, and it ended up pushing lower, putting in a higher low, and then once it took out that this high that it had put in, we have a bit of a W formation. We started to see a short squeeze and back up. The thing is, this rally into the close didn't really get all that much delta participation versus the rally off of the FOMC, which occurred over lunch. So the FOMC, we had a delta up here, and then on the close we had a delta that's lower into the last hour trading. Very odd. I also remarked in the conversion trading Maven's chat channel that this rally did not get breadth to go with it. The New York Stock Exchange breadth, which I have right here. Hang on, let me pop that out and show it to you. Here's the breadth, okay, for the session. So this is the New York Stock Exchange. So this is the day. The day opened right here, -8, the 746, whatever it is. And then we went sideways. And then on the FOMC, here's the FOMC right here at 11:40 my time. I'm in Chicago. Pushed all the way up to 1085. Then we pulled back with the S&P. So let's put this next to the S&P here. Pushes all the way up. So this 1085 is the equivalent of the 4175 on the S&P. Then we have this big push down, and we have a very broad push lower. So from plus 1085 to negative 1085, big swing. And then as the rally pushed up, notice the lower low here, as the rally pushed up into the close, the S&P ended up pushing to 4188 and a quarter. But look at the breadth. The breadth could not get back up there. It just seemed, I got to tell you, that move, I think one of the comments I made in the chat room was that this move up was very bruising to my ego as a trader. It was really bad. It just kind of just ran right through. It just seemed like a very um, higher time frame institutional type entry where it just any price was good enough and it just pushed and pushed. So we ended up settling at 41.75 right in here. This is the settlement price right here. This is the battle on the settlement. And then since then, you could see that there's just a multi-distribution profile here. We've been stair-stepping down, stair-stepping down. We have a very poor low now at 41.53. It's important that we remember this 41.50 area. You can see the 41.50 back here. High, low. It's quite significant. Not only is it a major strike, but it's got price action in it too. So to me, the point of control in the overnight session at the low end of the range in this lower distribution with the VWAP in mid up high with a coil here and a weak low. So very bizarre kind of opening configuration, almost like the market's waiting for more news. And there's a separation between the overnight point of control, full session VWAP, full session mid on a multi-distribution profile into the 50. So it's anybody's guess. And the early clues will be when the market opens and we see what the early participants do. Here's the bigger picture. This is the same chart, 30 minutes. You could see that yesterday was clearly a trend type day, except the trend started from the bottom, went up, pushed back, then finished higher. So it's not a directional trend. So this is really a B-shaped profile with the range extending multiple times the initial balance. This is normally an indication of trend, but overall, the behavior yesterday was very, very bizarre. I tell you what, it acted yesterday like it was end of month or end of quarter or rebalance. An index rebalance. That's how it traded. It just traded like a bunch of fund managers had to buy the stock or had to enter the market. And as soon as it made a low down at 4,100, they just went ahead and hit the buy button or sent the order to their trade desk, and the trade desk just worked those orders. That's what this looks like to me. And then since then, it's just been that business is done, and all it's doing is it's kind of drooping down and pulling back. This trend line's not valid. So this is what I'm seeing. Look, the structure, if you're not hearing it already, the structure coming into today is not, it's not a clear auction. Yesterday was definitely I got a lot of false setups. It's not a clear auction. And the way we're configured this morning, in that we are in this thin part of the profile from yesterday, which was a buy, sell, buy kind of trend. I'm just keeping my hands off the mouse for probably the first 20 minutes or so today, because what I'm going to be looking for this morning is I'm going to be looking for how does it behave, or how does it perform as right after the open, who is likely to be control, and more importantly, who's going to sustain control. Here's the sell imbalance. So now we're breaking that weak low. We're extending the low lower, which was kind of expected when I say a weak low. This double bottom weak low here. This is expected to break, and we're breaking it right now. Pretty okay delta on the break lower. You can see it down here. Participation by large lots, very large lots, and small lots, but there's a lot of conflict here is what I'm saying. And so I'm just keeping my hands off until we figure out who's packing a bigger punch, and then we'll join the fight from that perspective. Your early LIS is 41.60 this morning. 41.60 this morning in this low volume node. As long as it stays below there, I'm going to look for this to go all the way back to 24.60. 75.24.50 for the auction to resume. Even though we closed the SOC yesterday, the scene of the crime, the last price before JP released remarks, even though we've closed that, in this circumstance, I'm kind of keeping that in mind. I'm keeping that 24 in mind as a way, as a place where the auction was really just doing its job and got disrupted. So I'm kind of looking for this thing to come back to 24.50 and continue the auction from yesterday, like as if everything that happened after 12:40 Eastern into the close never happened. So we'll see. So that's the plan for today. Looking at the TPO detail, not much to say here other than these days now need to be merged together so that we can see what has been accomplished so far. So this is the new profile. This is the breakout profile. This is the breakout profile for the Fed. I'm going to keep it as it is because the structure here is still incomplete, but you can see that we are below a big volume node up above at 4170 or so on the time-based chart, and then our point of control is down here at 4128, putting us close to the 4124. So we're in between two key structures time-wise. And that's what I'm looking for. I'm going to leave you with that today. I'm not going to cover, I wanted to talk about crude, but I started late. Crude beautifully closing the single prints and the testing below the prior month's low, and then pushing, with a strong close like I talked about, gapping up, unable to close the gap beneath it into the 74.30 or so, and finishing very strong. As I said yesterday, crude is not something you want to be short right now. Crude has this target up here. You could see that we went to 79.25 this day. We went to 79.26. We had a one-tick failed auction before we sold off and finished near the close, and we are taking this back. So the next key test area in crude is 29.25.26, which brings us into this low volume node in this area. So I'm expecting crude to have free reign into 79.26. It might get a little bit responsive today. This is a big run. Crude finished very strong above 2 volatility sigma on the close, so it might have a little bit of profit taking coming in or exhaustion. It might form a balance day, but its work is pretty much done technically to the downside. All of that can change, of course, if the wrong person sneezes in Saudi Arabia or somewhere. So this is the key for crude, is that free and clear to 79.26 now, could pull back, but a bullish bias for now. Bullish bias back into balance up here in the 80 handle. Okay, I'll leave you with that. Please make sure you hit the like button if you have not subscribed. I've pinned subscribe, meaning you have not subscribed to the YouTube channel. It's free. I'm not charging you anything for that. Just hit that link right there, ft71.com/YouTube, all lowercase, and it'll send you right to the subscription button. If you've already subscribed, don't do this because it'll unsubscribe you. If you have not subscribed to the channel, please subscribe so that others can find it. Make sure you hit the like button, please. I appreciate it. Thank you. Take care.